Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ben Slavin, global head of ETFs and asset servicing at BNY Mellon. It's great to see you again. Welcome back to Trade Talks.
Great to see you, Jill.
All right, Ben, let's start with the inflows. How well did the ETF industry perform this year?
Well, here I am again talking about yet another record for the ETF industry. We hit over $1 trillion globally, and here we sit at about 850 billion in the US. I don't think we're going to reach $1 trillion, but we could get to 900. It's really been a crazy year. We've seen flows across the board, but in many ways, when you look at that picture, it's really a barbell. So we've seen a lot of the flow go to really the typical boring, broad-based indexes, showing investors increasing preference for the ETF structure. And at the same time, we've seen at the other end of the barbell, a lot of media attention and honestly, a lot of flow as well in some of the thematic products that have captured some attention of investors this year.
And Ben, exactly what I want to ask you, what trends did you see in the thematic space?
Well, look, it's been really an incredible run for thematics. It's really, it's been around for a long time, but really kind of come into its own in many ways, especially with all the attention around meme stocks, the rise of the retail investor. So now we are at about 170 plus billion in quote unquote thematic ETF products that are out there, really second to only the technology sector. And we're seeing these themes provide access to a wide variety of different strategies. And I think, even some areas where that have attracted a lot of attention, like ESG, are also catching a bid for investors looking to play those themes, but are doing so in these type of products, which hold things like clean energy stocks, carbon credits, and the like.
Earlier in the year, we spoke about mutual funds converting to ETFs. What are the benefits mutual funds can experience from converting into an actively managed ETF? And why is this trend set to become more common moving forward?
Yeah, it's super hot topic in the industry. It's one way for asset managers to enter the ETF space and take their shareholders along for the ride. Just yesterday, we saw yet another large asset manager, Franklin Templeton, come into the space, making an announcement that they are converting some mutual funds into ETFs. It was put on the map earlier this year by Guinness Atkinson, but more recently, we saw Dimensional and JP Morgan come in. So you're looking at over 57 billion in assets that have either converted or are set to convert. And really for the manager, it's all about retaining those assets or those shareholders, but also the performance track record, basically giving them a leg up from a distribution standpoint. And those shareholders who are in the funds, a lot of the back end work is done trying to make that transition easy. But in the end, the shareholder wakes up the next morning, and instead of a mutual fund, they hold an ETF, and that ETF needs to be held in a brokerage account, which is one of the complexities in executing these types of conversions.
Are actively managed ETFs gaining traction?
We see that quite a bit. In addition just to the flows, we've seen record number of new products launched. In those new products this year, we are seeing a high percentage, the majority in fact, are actually actively managed. So we see that category growing. Now, granted, it's a small piece of the total ETF pie, but we think flows are going to continue to increase, from I think around 7 to 8%, up, to 10 and possibly more going into next year. Partly because investors are getting more comfortable, partly because there's more product, partly because it makes sense at this point in the investment cycle, to take a look at some of these strategies. And so I think potentially next year could be a big year for actively managed ETFs to really start to increase their market share.
And outside of that, do you expect the trend seen in 2021 to accelerate in 2022? In other words, what should investors be watching for?
Well, looking into the crystal ball, sitting here today, it's not an easy thing to do. Certainly, look, cash is not an option. So I think that's one of the struggles. So, given some of the mixed signals we have in the markets right now, certainly just doing nothing at this point with where inflation's is at is going to cost you 5 to 6% a year. But we are seeing again additional interest in strategies that are going to generate some form of yield. We're also seeing quite a bit of interest from advisors on inflation-linked products, not just tips, which has caught a bid again here in the last several weeks, demonstrated by the flows, but also different ways to try to play the inflation theme. And so again, another example of that is seeing the inflows in the broad-based commodity benchmark. Again, investors looking to chase or play the inflation theme based on what the expectations are for 22.
And to wrap up here, perhaps the billion-dollar question is, do you think more Bitcoin or crypto product will come to market in 2022?
No good discussion about ETFs in this year would end without a question on crypto. So look, we've seen an incredible demand globally. There actually are now 78 products and counting listed globally that are holding some form of digital asset or providing some kind of digital asset exposure. We saw the SEC allow the futures-based ETFs to come to market earlier this year. No doubt, it's a milestone event. That said, it's not the end game, right? We still see demand for spot-based products. When those products are approved, it's impossible to say. There clearly are some concerns that the SEC has laid out that have not been addressed yet. But there are ways for investors to get access. Clearly, the futures-based products, also the over-the-counter or OTC listed trusts like Grayscale, GBTC, and also lots of strategies are coming to market that hold equities, trying to give investors some kind of exposure. Granted, it's not one-to-one correlation, but it does give access or exposure to digital assets and some of the underpinning of the technology, which I think we'll see more of going into next year.
All right, Ben, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.